Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the August 19th, terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a magnificent and magical Monday. Let's make sure that you and I, that we do all that we can do to have a terrific Tuesday. I know I'll do all that I can during the next couple hours. I'm going to share with you extraordinary tools for helping us understand where the markets are headed to. We'll utilize those A to B equals CD tools. That's the lightning bolt pattern. We'll take a look at Fibonacci retracements and expansions because the markets are really only doing three things. They're either expanding, contracting, or moving sideways out there in that consolidation zone. We'll also look at the signs that the bulls and bears leave for you and I each and every trading session. And those are the Japanese candlesticks. Put all that together, folks, and we've got a powerful system out there. Of course, nothing more powerful than the trading psychology, because trading is really 80% psychology. The other 20%, it's floating in between our ears. Now, here at TFNN, and welcome to all our new listeners out there. Remember, Hotel California check-in time has been upped. No, upped, is that right? Has been pushed back. Check-in time now, you can check in. It's the only hotel that I know of that you can check in at 8 a.m. It runs from 8 a.m. We've got 10 hours of live programming, 8 a.m. to 6 p.m. Each trading session out there. It's an interactive show. That means you can give us a call at 877-927-6648. Internationally, it's 727-554-1044. Each of us, all of us contributors here, we'd love to hear from you. Give us a call. You and I, we can go hunting for bulls and bears out there. And as we begin our day, let me say that for me, every day is a gift to be here with you. That's why they call it a presence, and I do appreciate your presence with me here today. It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, Dow Futures trading up 54 points. They're trading on at 16,847. S&P futures up 5, trade at 1972. We got the NASDAQ up 11 points, trading out at 4,024. Russell 2000 up a couple points, trading out at 1156. King dollar really on the move out here. We'll have to take a look at the currency pairs back up 200 ticks. Up 20 cents, trading out at 81.84. The euro back a bit. Looks like the biggest movement is in the British pound. So we'll go take a look at the great British pound out there. Goldilocks is flat, up 90 cents right now, trading out at 1,300 even. Silver down about 4 pennies, trade at 19.59. Light sweet crude up 13 cents, trade out at 96.55. Natural gas up a couple of percent this morning, up 8 pennies, trading out at $3.87 out here. A quick peek across the globe out there. We'll see that the DAX is up 93 points, another 1% here this morning. A strong session yesterday. In fact, let's go peek in on the DAX. Let's go see where it's at. And it's retracement from high to low out here. That high that we're going to take a look at inside the DAX is the high that came in on the trading session of June the 20th. That's when it made its most recent high, 10,050.98. Down to the low that came in out here on August the 8th out there. We'll see right now just a dead cat bounce so far. Still only a 0.382 retracement. 93.4183 is the exact number. It's trading out at 93.39. If we take a look at the FTSE out here, in fact, let's take a look at the FTSE. It's up 33 points, straight out at 67.74. We can see that it is at its 0.786 retrace, but it's just slightly higher. The number for its 0.786 retracement, well, that's not off of its high, though. That's off of the last leg down. Let's go take a look at where the FTSE is at off of its high. Let's do that. That's going to be the trading session here from May 15th. Now, I will pull this back here, but I believe that is the top of the consolidation box. I could be wrong. Let's actually not even assume. Let's go take a look at it. But if we take a look at retracement levels, well, hey, even off of the high out here from May 15th down to the low that was put in on August the 8th, you can see the FTSE is up above the 0.618 retracement level. That number would be 67.55. You're at 67.74. Let's pull this back a bit here because the FTSE is in one heck of a nice consolidation out here. And, yeah, that consolidation level, it's actually a little bit lower out here. I would say the first break was a false break to the upside out here, and it's a doozy of a consolidation. 68.67 is the top of the consolidation. The bottom is about 64.22 out there. Let me pull it back this way. There we go. Well, that doesn't work real well. Let me expand it. And now we can see everything. Let's do it like this. There we go. So now you can see well, you should be able to see if you're watching us on Tiger TV. You should be able to see the lines of demarcation. So any break above 68.67 is going to, in the low of the consolidation, 64.22. So you're looking at, what, a 340-point move or so if in fact the FTSE is to break out of this long-term consolidation. Been consolidating since the December 16th area. Remember, our markets took off topside December 18th. That was Uncle Ben Bernanke's going away birthday party that the markets gave to him. It happens to be the bottom of the consolidation inside of the FTSE out there. Nonetheless, let's go take a look at what's going on inside our futures market right now. Let's go take a look at the daily charts out here. We'll go take a look at all four quadrants, see where we're at. Let's start off by taking a look at the Dow. The Dow trade at 16,849, up 50 points or so. Looks like the Dow, now what the Dow futures are doing as we speak, they are above the breakdown. The breakdown is nothing more than that descending, well, not the descending, the wide-ranging bar to the downside on the trading session of July 31st, the top of which is 16,822. So that alone is impressive. Looks like the next stop out here, 16,884. Clearly broken its descending price channel. The question is it now starting a new price channel, a rising price channel? We got enough days in here to go ahead and at least put that into the system. So we'll go ahead. We'll just mark it here with right about there. That'll be the top of the consolidation, or the bottom of the consolidation. That, in essence, becomes the top. Let me go ahead and move this down. We'll go ahead and change the colors out here. Is that? Yeah. So a fairly narrow-banded consolidation that the Dow futures are trading in. Well, let's go change those colors, make it a little bit easier to read. Well, let's go make those what? Let's make those maybe a nice light blue out there. That shows up the best on a colored background like this. So we got that change in place out here. Did it change it? No, it didn't. Apply that. Come on, apply. Hit that apply. There we go. And now we are all set with regard to the rising price channel for the Dow on a daily basis. So we'll continue to look at that. Let's go take a look at the NASDAQ. Let's go take a look at the NASDAQ. What do we know about the NASDAQ? Well, we know a number of things out here. Number one, it's been trading in a little sideways consolidation on its own. It's up above its rising price channel, and that has not acted as resistance. It's really not a big deal if it doesn't out here. If we see a duck below, maybe that carries with it a little bit different message out here. But the reality is the NASDAQ has been consolidating. You can take it back all the way. If we take a look at the consolidation zone, if you will, that's going to be about the 38.27 mark, and we're going to use as the top of that consolidation 39.91. So if we take a look at, what is that, 38, that's 170 points, 160 points, somewhere right around there. You can go ahead and strap on 160 points to 39.91, and that is the price projection for the NQ out here, so long as it does not give us a reversal sign or dip back below the 39.91 level. Of course, it's got a long way down before it would touch its old resistance level, which should become new support, 39.12, utilizing its market profile, its TAS market profile out there. If we take a look at the S&P futures, go see what they're doing right now. The S&P futures, let me pull this back. I know there's a lot of stuff on here, but this is all stuff that is important. Let's just go draw that back in again. And if we take a look at, in fact, let's do this. Let's go draw, I don't want to draw a rising price channel here, not just yet. We'll do that in a moment. We take a look at, from a price standpoint. Now, the price standpoint, it is possible that what the S&P has done here on the trading session of August the 8th, because we've come off of that level in a very explosive kind of a way out here. In fact, from an A to B equals CD to the upside here, there's really two of them that we could take a look at out here. Your A point, you know, for all intents and purposes, your A point really could come all the way back to April the 14th. But I'm just going to bring it back here to the May 15th time frame. If that's our A point, and our B point out here is this little doji high from July 24th. You get above that doji high, price projection 2024, maybe 2061. But let's take things one step at a time out here. Price is neither overbought nor oversold on the using the 14-period relative strength indicator. If we come from our doji high back on July 24th down to the low that was put in here on August the 8th, we're going to see price inside the E-estimate of the S&P futures above the .786 retracement level. What does that set up? That sets up a 100% move of a move. That's going to be that potential B point, the swing point from July 24th. So it looks like that is where S&P futures are headed to. 1985, 75 is the top of that. 1976, 75 is the bottom of that session. Are we into the bottom of the session? We're pretty close. 1976.75, inter-session high 1974.50. So that is where the S&P futures are headed to. Let's take a look at the Russell before we go to this first hard break. The Russell 2000, from its high, its consolidation high as well from July 1st down to the low put in here on August the 1st, not August the 8th. It is above the 0.382 retracement. The Russell 2000 futures look like they're headed for 1169.60. Right now, trading out at 11.57 out there. It, too, is above its July 31st candle. It got above that yesterday. 877-927-6648. This is Steve Rhodes. This is TFNN. Give us a call, folks. I'd love to hear from you. Dow futures at 56, S&P at 5. We'll be right back.
Well, it's always better when we're together. Yeah, it's always better when we're together.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. No change here in the futures market. And what I want to do during this 5-minute segment as much as I can. Yesterday afternoon, going off the second hour of the show, had a call from Ben in, it's really in the, I don't know if it was the last segment, but I had a call from Ben in Tallahassee. We were taking a look at the diamonds, and his question was, is there any other indicator other than price that he should consider using, not price, volume, that he should consider using out there? And I was beginning to describe this right here. And this is a trading pyramid. And if you're watching this on Tiger TV, you can take a look at my trading pyramid. It's really broken down into, for the most part, 4 primary quadrants. Volume, supply and demand is 1. Volatility or liquidity is a 2nd. Momentum and speed is a 3rd. Energy and the angle of the move being a 4th. Of course, that's assuming you know where support and resistance is and you understand what the broad market trend is. Now, there are literally, what you would take all the indicators that you have out there, and you can break them into those 4 primary areas, which is why sometimes it's best just to really choose one from a specific area and become a master of that versus having, for example, if you use the relative strength indicator and the stochastics, you'll find that they have about an 85% correlation. So utilize one versus the other, become an expert at one versus the other, and then add something from your volume and your supply and demand area. Add something from the liquidity area, the volatility, like the Bollinger Bands, Keltner channels, and so forth. And utilize something from the energy, whether it's a MACD, whether it's a moving averages, whether it's the A to B equals CD tool. That qualifies in the energy and the angle as well. So now, having that done, and there's many, many more. In fact, many years ago, I ran some studies, and I ran it on the diamonds, the SPYs. I think I also did it on the Qs. In the study that I ran, I had access to a piece of software that allowed me to do this. So go ahead and break the market into, or break indicators into those 4 quadrants. And I ran it on the diamonds. Now I'm looking at the actual spreadsheet that I've got here on another screen. The time period that I used so that it was a fair balance of markets moving up and down, kind of really a consolidation, a large consolidation. I used from July of 2000, July 9th, 2007 to be exact, through October 14th, 2010 out there. That was enough of a time period to get a pretty decent view as to what the diamonds would do. Now, here's what I found. I found that taking a look at, now the indicator, the iterations that were done, I was trying to look that up. I don't recall if it's 1,800 or 8,000 between the indicators that were being used out there for each of those 4 quadrants. But what I found was this, is if you were looking to utilize 4 indicators that would work really well in the diamonds, to the long side, what was working the best was something referred to as the intraday momentum index out there. Not available on most trading systems. The Wilder's smoothing indice that was being used to understand the power of the angle out there. The power of the angle. The power of that angle. Wilder smoothing. For the volatility, the Keltner channels actually gave you the best indication for when to be long versus not to be long. And an unbalanced volume was the best volume tool out there of all of the volume tools that I had selected, which was quite a few of them, to see what gave the best results. Now, on the short side, it was a different set of tools out there. And that different set of tools was using something referred to for velocity, for momentum, was the ultimate oscillator. For that angle, now I didn't have the ability to put David White's power law vector indicator in there, which I would have, but for the angular piece of a move, it's something called the polarized fractal efficiency indicator out there. To the downside from volatility, well, Keltner channels work the best inside the Dow diamonds. And then from a volume standpoint, it was non-balanced volume. It was what's referred to as the ease of movement tool out there. And so I just simply share that with you because as you continue to expand your technical prowess out there, what I want you to understand is that utilizing these indicators, that there are different tools that are going to work the best. When you find something that's not working for you, put it off to the side. Don't throw it out in the garbage because the market conditions, that tool probably worked during certain market conditions. And what you want to be able to do is find the tools that work during the current market conditions that you are in right now. Give you an idea, moving averages. Also over the weekend here, I did some additional testing because I've got the ability to do some back testing out there. And sometimes I'll just run when the screens aren't moving. If I'm just sitting around or what have you, I'll just simply run some tests. Just as another example out there for moving averages. So between 1929, if we took a look at the Dow, between 1929 and last Saturday, so Friday's close out there, from the long side on a daily basis, the moving averages that work the best to be bullish from a lagging indicator standpoint was the 9-day as your fast and the 20-day as your slow moving average out there. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back.
It's better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you are under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're on the races. We got about up to the points. Take up 16.82. S&P up 4 at 1976. NASDAQ up 7 points. Trade out at 45.15. Russell up 2 points. Trade out at 11.61. To the upside, we've got TJX companies. TJX up $3.51, up 6.5% out here. Looks like they're out with numbers. Net income $517 million versus $479. Revenues, net sales $6.9 billion versus $6.4. So beating the top line and the bottom line. You've got Home Depot to the upside, up 3% this morning, up nearly 4%, up $3. Dick's Sporting Goods getting in the mix, up 7% out here. Cheetah Mobile, CM is the ticker symbol, up 10%, up 260. Ross Stores, ROST, up 2.5%. Skilled Healthcare, SKH, up 23% this morning. That's with movers to the upside. To the downside, Elizabeth Arden, RDEN, up 23%, getting just the kibosh this morning. BHP Billiton down 5% off $4. Tesla off $3.32. We need to see where Tesla finished the trading session yesterday. Was taking out that high 265, I believe, was the number. So it looks like it rejected that level. El Pollo Loco, LOCO, is the ticker symbol, down $2 right now. Jumai International, not to be confused with Junmai Daiginjo, which is if you're out looking for sake and you want some premium sake, look for the Junmai Daiginjo blend out there. But Jumai International, that's off $1, down about 3%. Rio Tinto off 78 cents out there. Now I'm going to go back real quickly here to the Dow Diamonds. Was talking about the Dow, talking about some other tools that you can use out there. And I mentioned the test that I ran. I ran several tests out there. One was taking a look at the Dow, and again, I went back. My data goes back to 1928, so it was easy to run a simple moving average test inside of the Dow Diamonds. I gave you those numbers to the long side going back to 1929. Now, 1929 might be too far to really go back and really take a look at, but I wanted to introduce. Now, as far as what the moving average test was, it's a simple crossover tool that I just ran. So it said that basically when the fast moving average crosses above the slow moving average, go along. And don't exit the trade until you see those moving averages flip. Now, that would not be how you would normally trade things. You would utilize other tools to exit a position. But there was no real way for me to intuitively say, hey, when we complete an A to B equals CD or this happens. So I just simply, the only way for me to understand what, if you were just to use moving averages as a tool out there, was there anything that produced a profit over a period of time? And if so, what were those moving averages? Hey, if they can produce a profit in a lagging kind of a situation out there, then then it's worth taking a look at. Now, inside of the Dow to the long side, I gave you those numbers. Those numbers going back to 1929. Let me switch over here. Again, was 9 and 20 produced the best results over that time period. Now, during the short side, that's not the case. In fact, in 1929, the same time period, September 1st, 1929, through the close of Friday, to the short side over that same time period, the moving averages that worked the best were the 6 and the 10, the 6 being the fastest, slow being the 10. But if we went ahead and fast-forwarded to the time period of, let me see here, what did I choose? I chose December 31st of 1999, right? A consolidation high time period, if you will, through August 15th. The moving averages that worked the best to the downside was a 2, so very fast, and a 14. And if we go just check in on the 2 and 14 period moving averages out here, let's take a look at it. And you so do some testing on your own. I'm just going to go ahead and give you this nice morsel of information out here. And what I've got now, if you watch this on Tiger TV, I've got the DIA. So as opposed to showing the Dow, I'm going to go ahead and show the diamonds out here. And the pink one, let me go ahead and make this a little bit larger on my screen, just simply so that it shows up just a bit more. Let me get back there. Let's go ahead and make that length. How about width? Let's see if that increases it. Does that? No, that's the time period. That's a 2. I don't want to do that. Oh, here's where we go. Let's try. Let's see. Is that 2? Yeah, that's pretty good. So we've got that. And let's come back here. Let's change the white line. So we're looking at the chartreuse or the purplish color out there on our screen. And let me do this also. Let's get rid of just to make it easier. Let me get rid of a couple. Let me get rid of the TAS. Market profiles out there. Okay, so that's good. We've just got the moving averages. We've got volume, and we've got the price relative strength divergent pattern out here. So if you were to take a look at the Dow Diamonds as an example, if we had known this, if we had known this ahead of time, how would that have changed? Perhaps the way that you would have traded the Dow Diamonds on July 25th. You see, on July 25th, the Dow Diamonds, we see that moving average crossed over. And so if we take a look at the back testing that Stevie was able to run, there was a signal utilizing one of the 4 quadrants out there. And if we take a look at those 4 quadrants in the moving average level, that's that angle, it's that energy and that angle level. So that was one of the 4 out there. And you can see you got a crossover. Now, where are we at right now? Well, if you utilize that same tool that I use that said, hey, you're going to exit any short position when you see the reverse of that, well, that took place out here on the trading session of August the 13th or August the 14th out here. I can't tell which one. But clearly, that was the message of those moving averages. Remember, they are lagging type indicators. If we pull this chart back a bit further out here, you got a little signal to go short back here, and it lasted for a couple days back on May 15th till it made a low on May 20th. You got the indication to be out of that trade. You probably would have maybe lost a little bit to have been flat, and that was on May 22nd out there. But go ahead and run these, add these to your tool out here. Take a look at coming off of the highs back on the trading session of January 22nd, 2014, before the Dow started cascading down and making those lows back in the February timeframe out there. So utilize this as an assortment of tools out there. And I would say, you know, I think that the time periods of between December 1999 through last Friday, pretty decent time period to go ahead and utilize. I didn't get a chance to run the same tool or the same back testing tool to come up with the moving averages from the long side for that time period out there. But you can do that. You can do the same. Maybe I'll at some point do a special workshop that shows you how to do some simple back testing. Then you can apply that to your trading systems out there. So that was on the Dow Diamonds, and that was a total follow through because I thought the question was really timely when Ben from Tallahassee called. So Ben, I hope that you are listening in on the show, and if not, we'll get you to listen to the archive of the show. So let's go back to the markets. Let's go see now what do we have going on inside the markets. The Dow's up 36, S&P is up 4. Let's go take a look at some things that are moving in the markets. Well, we started off with TJX Companies. That's up about 6%, up $3 on some nice earnings news. And let's go see what they are trading into out here. Now, you could do the same thing. I could do the same kind of back testing on each individual instrument to the upside and to the downside out there. And in essence, that's really what you want to be able to do to try if you're going to utilize a set of indicators to the extent that you can go ahead and back test them out there and then go apply that to the chart and then utilize that. Remember, it's not just one tool. It's got to be a multiple of tools that are used in order to, in my opinion, in order to be able to really call the markets out here. Now, if we take a look at TJ Maxx, what is that running into? Well, we know we've got some significant resistance. Let me go ahead and let's go ahead and I'm going to get rid of a few things on this chart out here. So we're going to turn that off. Now, that's a different set of moving averages out there than what we just looked at. Let me just turn off the signal box as well. And what we can see that TJ Maxx is doing here this morning, running right into a little buzzsaw. That buzzsaw is at the 57.83 level. And that buzzsaw, if we take a look at the volume down here, right around the, that didn't give me, right around the, well, I can tell you what the exact volume is, 17 million shares. So in the case of TJX, this had a big downdraft session on May the 20th out here, 17 million shares to the downside. Now, if it can close above 57.83. Yeah, if it can close above 57.83, it will have closed the gap out there, and that'll be more bullish than bearish. Of course, you like to see volume exceed that 17 million shares out there, and so far in 13 minutes of trading, we've seen 1.8 million shares out here. So closing that window, all of a sudden that no longer becomes resistance. If it is unable to close that level, 57.83, and that acts as a resistance area, if you get three tests of the 57.83 and a rejection, that sets up a really strong resistance area. Let's take a look at just simply a trend line here inside of TJX. And let's come off of this little swing point high, January 13th. So now we're just going to take a look at a trend line. We'll add a second tool out here. And in order for TJX to really break out to the bullish side or give us that it is changing its trend out here, you'd really like to see it close above the level. If we take a look at retracements now, retracements from the high to the low out here inside of TJX, it looks like I'm going to come down to either the low from June 26th. That's at 51.97, or on the trading session of 51.91 versus 51.97. Yeah, we're going to go with the 51.91. My math book says that's a little bit lower number. So we can see here is that you're above the 0.382 retracement level. So closing the gap at the price point of 57.83. If it can get through that trend line, well, then it'll be heading towards that 0.618 retracement level, 59.62. Then the real test for TJX becomes, hey, what happens when you break that trend? Do you come back, test it, reject it, and then it's off to the races for TJX. So that's moving to the upside. We've got American Wood, AMWD, American Woodmark Corporation. They're out with numbers as well. $211 million in sales versus $178, so being the top line in a nice fashion out here. $9 million to the bottom line versus $6.6. So this is gapping out, taking out a B point with volume. Let's go see if there's any volume issues that it has to deal with out here. It's got a bit of a supply line that it's trading right into, but it's trading right over it right now, and that is from the trading session of February 18th. That had 900,000 shares to the downside, up this morning with 157,000 shares. So that is pretty good out here. Let's go see where this is likely to head to. Now it looks like it's going to go back into its area where it has a kind of a double top. So if this is going to break out, it's going to get above the 39.53 area out there. And last time up had volume of only 156,000 shares out there. So you can see this had formed one of Stevie's and your favorite patterns out here at the bottom. So at the lows, that's the trading session of June 3rd out here. In fact, it had a very nice price relative strength divergent pattern. If we take a look at that, take a look at the lowest low using that relative strength all the way down here to that candle session. Oops, I didn't mean to delete it, but let's go ahead. I'll put that back on there. So there's one of our favorite patterns out here for identifying when the market is telling you that, hey, the move either to the upside or to the downside is not real out here. And so it gave you that indication. And that is in American Woodmark Corp, AMWD out there. Let's see what else do we have moving. You got Google to the upside. How about Home Depot? Let's take a look at Home Depot. They're out with numbers as well. Looks like sales $23 billion, which was up about 6% from the prior year out here. Net earnings $2.1 billion versus $1.8. So let's go take a look at Home Depot. Home Depot is at all-time highs. Yes, it most certainly is. Let me put this on a weekly basis just to make sure of that, but I believe it is. Yeah, Home Depot continuing to move to the upside out here. So trading out at $87. We can argue that this has also been in a consolidation on a weekly basis back into the time period of April the 29th in 2013. So this has been moving sideways, building a base, and guess what? It just broke out of that base. Looks like it broke out a little bit here last week August 11th with 22 million shares. That was taking over 31 million shares. So that didn't do it on volume, but this week looks like it most certainly will. Let's take a look back now on the daily charts for Home Depot. What's important about that consolidation? Well, that consolidation can help us to identify where price is likely to head to. So let's go figure that out on the consolidation move. So the bottom of the consolidation being somewhere right around here. What did that do? That didn't do anything for me. Let's we'll make it right here. There we go. There's our line. So right around the $72 mark as the bottom of the consolidation, and the top of the consolidation right around here. So we'll get a price projection right in about the 82. So you got about a $10 move. So it says $92 is the measured move for Home Depot out there. And, with this gap up, it's always a dangerous thing. All-time highs for equities to gap up. The reason is because any bad news in a market, tomorrow or the next day could create that all-important island reversal top out there, and you don't like to see that take place inside. Well, if you're bearish, you do like to see it take place out there, but that's not the pattern that you've got today. But it's something to be paying attention to and looking for tomorrow. So you got Home Depot to the upside. Restoration Hardware joining in on the game out here, up $3, up about 3.5% out here. No news behind its move, but it's just simply drafting the move inside of Home Depot. Let me turn some of these other indicator tools back on. And in the case of Restoration Hardware, up above its market profile, TAS market profile resistance area, which is 85.22 out there. Volume behind the move here today, 210,000 shares. This is Steve Rhodes. This is TFNN.
Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It isn't that, folks, and there's no better place for stargazing than in Hawaii on the Big Island out there. Hope that you've had a chance to do that. If you haven't, add that to your bucket list out there. Let's go to Ben in Tampa. Ben, thanks for calling. Thanks for holding. Have you had the chance to look at stars in the Big Island of Hawaii?
Nope, not yet.
Add that to your list, and it's a good thing. It's a good thing out there if you like stargazing out there.
There you go. Well, that sounds cool. Sounds cool. Hey, I was watching your show, and you briefly put on your trading triangle.
Yes.
I'm wondering, could you elaborate a little bit more, show that a little bit longer? It seemed very simple to kind of put the priorities in line there.
Yeah, so thanks for asking. I put that up on my screen out here, and really what it's all about, Ben, is the first and most important thing in trading and investing is trying to understand the trend. So the broad market, what's going on inside the broad market, or certainly what's going on inside your sector, that you might be trading. And then then I think the next thing that any of us should do is identify levels of support and resistance for whatever it is that you're trading. So to me, those are the first two things that you take a look at. Then from there, if you're looking to utilize technical tools, I believe that you need to break those. Those technical tools are broken down into 4 different categories. One's dealing with volume, supply and demand, very important. But it's not just the volume, because there are other tools that measure volume out there. There's the demand index, the money flow index, on balance volume, Chaikin advance decline oscillator. So there's a number. There's many more than what I even have on my system out here. And then there's indicators that measure momentum, Williams percentage R, the commodity channel index, the relative strength index, the stochastics. Any one of those provide help in understanding what the momentum behind whatever it is you trade. This works on everything, currencies, doesn't matter what you trade, it doesn't matter what time frame. And then it's always important to understand the volatility. Hey, what's going on in the trade? And that's where a lot of folks will use Bollinger Bands. Those are very popular. Keltner channels, those are pretty popular in most systems. Standard deviations, which Daryl Martin, makes a living at, understanding standard deviations. Any of those help you understand volatility, liquidity type issues. And then you've got the power of the move, that real energy, the real angle. The MACD is one that's very popular. Gann swing bands, David White's power law vector indicator, moving averages are a simple one. And I say you break it down into those 4 areas. That way you're not relying upon just one indicator to help you decide what the market might be doing as you're trading out there.
Wow, that's great. How about when you're ready to enter a trade or exit a trade, for that matter, do you have multiple time frames up?
Yeah, I will take a look at multiple time frames. So when I enter a trade, I already know where my exit is. So I have an exit strategy as soon as I've entered a trade. I've got it on both sides. So I've got the stop. And when I take a look at stops, what I'm always taking a look at is I'm taking a look at what the average true range is. What has taken place? What's the average movement over the last 10 days? Then I take that and I multiply that times either 1.272 or 1.618. Because, you see, I can't control where price goes. I can only control my stop. Once I have that, then I know what my position size is. And it's a matter of 1% of my capital on $10,000. It would be $100 divided by my stop, and that tells me how many shares to buy. And it's not anymore, it's as simple as that.
Awesome.
All right,
Steve,
Ben?
You put it in simple terms, man. Great. Absolutely super.
Thanks for calling. Thanks for listening. That was Ben in Tampa. Folks, if you're off to start your Tuesday, have a terrific Tuesday. And thanks, as always, for joining us. It is a present when you are present with me out here. Stay tuned. The Money Masters show is up next. Otherwise, have a great day, and I look forward to seeing you tomorrow morning. Take care, folks.
Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.